Hello everyone, I am Tarannum Mansoori, second year MMS student of SAS Institute of Management Studies. I am going to present on the topic of mutual fund. So, what is mutual fund? As you can see here, introduction is given here. A mutual fund is a professionally managed type of collective investment scheme that pools money from many investors to buy stocks, bonds, short-term money market instruments, and or other securities. The next one is concept. The first point is a mutual fund is a trust that pools the saving of a number of investors who share a common financial goal. Second point is the money thus collected is then invested in capital market instruments such as shares, debentures, and other securities. Third point is the income earned through these investments and the capital appreciations realized are shared by its unit holders in proportions to number of units owned by them. The last one is thus a mutual fund is the most suitable investment for the common man as it offers an opportunity to invest in a diversified, professionally managed basket of securities at a relatively low cost. Now we have the history of mutual fund. The first point is it started in Europe in the mid 1800. Second point is Massachusetts HS Investors Trust first official mutual funds. And third point is first 27 years slow growth and index funds were born in 1970. The last one is major growth after IRA introduced. Now we have the mutual funds in India. The mutual fund industry in India started in 1963 with the formations of Unit Trust of India at the initiative of the Government of India and Reserve Bank. The history of mutual fund in India can be broadly divided into four distinct phases. First phase 1964 to 1987. Second phase is equal to 1987 to 1993, and third phase 1993 to 2003, and fourth phase 2003. The next one is mutual fund operation flowchart. So here diagram is given here. uh, as you can see, investor to pool their money with, investor to fund to security to returns, and returns to investors. Now we have the diagram of types of mutual fund. Types of mutual fund. There are the three types: structures, investment objective, special schemes. And structures in industry specific schemes, index scheme, sector scheme. In investment, growth fund, investment fund, balanced funds, money market funds. And structure, open ended fund, close ended fund, interval fund. The next one is type of mutual fund scheme. By structure, open ended, anytime enter, select exit. Close ended scheme, listed on exchange, redemptions after period of scheme is over. Second point, by investment objective, equity, bracket growth, only in stocks long term, 3 year or more. There are the more options is given here as you can see. And other scheme, tax saving scheme, special schemes, ULIP. The next one is special scheme. Fund based on size of this companies invested. Large cap, large cap fund, mid cap fund, small cap fund. Now we have the regulation. SEBI, Bracket Mutual Fund. Regulations 1996, Security Exchange Board of India. The mutual funds regulated has clearly Defined rules which govern mutual funds. These rules relate to the formations, administrations, and management of mutual funds, and also prescribed disclosure and accounting requirements. Such a high level of regulation seeks to protect the interest of investment. The next one is reasons to invest. Expert on your side. When you invest in a mutual fund, you buy into the experience and skills of a fund manager and an army of professional analysts. Limited risk. Mutual fund are diversifications in actions, and hence do not rely on the performance of a single entity. More for less. For the price of one plus cheap stock for a instant, you could get yourself a number of unit across a number of companies and industries. When you invest in a fund, easy investing. You can invest in a mutual fund with as a title as rupees 5,000. Salaried individual also have the options of investing in a monthly saving plan. Convenience. You can invest directly with a fund house or through your bank or financial advisor, or even over the internet. Investors protections. A mutual fund in India is registered with the SEBI, which also maintain the operations of the fund to protect your interest. Quick access to your money. It's a good to know that should you need your money at short notice, you can usually get it in 4 working days. Transparency. As an investors, you get updated on the value of your units. Informations on specific investments made by the mutual funds and the fund managers strategy and outlook. Low transactions cost. A mutual fund by sheer scales of its investments is able to carry out good cost effective brokerage transactions. Tax benefits. Over the years, tax policies on mutual funds have been favorable to invest and continue to be so. Say how to buy. There is some processes given here how to buy. As you can see here, first step is financial goal, and second step is identify what to buy, and the third step is evaluate fund from various mutual funds cost. The next one is how to redeem. Redeem. Download common transactions slip, then choose redemption, and then fill up relevant details, and then sign the form, and then submit, and the last one, money into your bank account. Now we have the risk factor of mutual funds. The risk return trade off. The most important relationship to understand it is risk return trade off. Higher the risk, greater the return, or and lower the risk, lesser the return. Market is sometimes price and yield of all securities rise and fall. Broad outsides influence affecting the market in general lead to this. Credit risk. The debt servicing ability of a company through its cash flows determines the credit risk faced by you. Inflation risk. Inflation is the loss of purchasing power over time. In a free market economy, interest rates are difficult, if not impossible, to predict. Then political risk. Changes in government policy and political decisions can change the investment environment. Liquidity risk. Liquidity risk arises when the becomes difficult to sell the securities that one has purchased. Mutual funds are subject to market risk. Please read the offer documents carefully before investing. Thank you so much everyone for watching my video.